Well, I think the industry hasn't seen this since the mid-'80s. This is truly an oversupplied situation. It is a commodity. It goes through these cycles, but this is a really brutal one. Could go on for quite a while. And any industry that sees their revenues go from, in this case, $115 a barrel to $28 a barrel this morning as we talk, I mean, these are huge structural changes that have unintended consequences with countries and companies as well.
For BP's point of view, how are you managing? You're having to get rid of projects and staff, of course.
Yes, of course. It's that's the most painful part of it. But we've had our own special circumstances, as you know. After the accident in the Gulf of Mexico, we've sold $50 billion over the last 5 years to meet those obligations. I think that would be a difficult thing to do today. Our balance sheet is strong. We have lots of projects underway. It's like a horse crossing a river. You don't stop those projects when they're halfway through, but we are deferring and cutting down on new investments, and we'll weather the storm.
What's driving this? In the sense of oversupply, we talk about oversupply, 1.5 million barrels a day more than demand. But is it as simple as just OPEC continuing to pump to gain market share?
There's a couple of big changes that have happened. OPEC has continued to pump, and I think when you talk to the OPEC leaders, they're very clear. They say, why should we shut in our lowest cost production to subsidize high cost production? That's pretty simple supply and demand fundamentals. So they've gone through continuing new projects, and the United States is the wild card that no one saw 5-10 years ago. 10 million barrels a day today. It's really double its production in a short period of time. That's what's different. But that's coming down now.
Iran is a wild card.
It is a wild card with the lifting of the sanctions. I know that there's storage and ships there ready to go out in the markets fairly soon. And that's why I think this first quarter, maybe in the second quarter, we'll see our low point.
Let's talk about that, the low point. You believe that there is light at the end of the tunnel, or have we still got a few more curves to go?
Oh, I think there's curves. It's a curving tunnel. But I think the price can still step down. There's a lot of factors now. It's pretty darn low now. April, the summer driving season starts. You start gearing up refineries to pull down crude stocks to create the driving season. That will begin to moderate the growth. We do see on a daily basis global supply and demand probably coming into balance the third or fourth quarter. Now, by that time, you have all the stocks, tanks filled, swimming pools filled with oil, you begin the process of drawing it down, and that's going to take a lot of time. Somewhere in there, sentiment will shift. The investments that are being stopped today, there will be a knock-on effect of that down the road when the world's going to need its oil.
How worried are you about how 2016 goes?
Well, I won't jump off of a building, but I am worried. I'm worried about commodity prices and the unintended consequences geopolitically.